Analyst Zain Vawda speaks to us now about the latest market developments. A good evening to you, Zain. Do talk us through today's activity, especially driven by that mixed messaging from the US Fed, as well as expected economic data later this week.
Good evening to you and the viewers, Tumisang. Well, as you mentioned, it's been a relatively cautious start to the week here, and I think, like you said, the Fed's mixed messaging, one of the reasons for that. I think there is other reasons as well. However, just touching on the Fed again, given the recent bout of data we have seen from the US today, also we had durable goods orders as well coming in above expectations. Now, obviously, the strong bout of data, coupled with what we heard from the Fed last week in terms of rate cuts, there does seem to be this disconnect between how market participants are seeing the market and how the Feds are perceiving, obviously, when they will begin that rate cut cycle, and this obviously keeping market participants on edge at the moment. Now, that obviously this week, we also do have, it's obviously the end of the quarter, Q1, as well as the end of March. So I think we could see quite a bit of volatility later in the week as, obviously institutions reposition ahead of Q2, potential profit taking as well ahead of, the end of the week. So, and obviously with the Easter break coming up. So there's quite a bit to look at this week. We also have the all-important PCE data out of the US later in the week. Now that's obviously the Fed's preferred gauge for inflation. So that obviously might give us also more insight into when this rate cut cycle might begin. However, that data is also released on Easter Friday. So given that markets will be closed on that day, we could only see the full effect of that heading into next week. So quite a bit still to happen this week. But at the moment, caution seems to be, guiding markets at the moment.
Let's also talk about how emerging markets, including the rand, are reacting to all these developments.
Well, obviously on the back of last week, Tumisang, we did see quite a bit of a roller coaster ride there for the rand in particular, and a lot of emerging market currencies in particular. Now, if we look at the stocks from emerging markets, a lot of them obviously benefited last week. That on the global sentiment was positive after that messages from the Fed, where a lot of market participants seeing that as a slight form of confirmation that the Fed are still looking to start those rate cuts in June, which, as I said, still debate rages about that. But emerging markets, especially on the stock side, benefiting quite a bit from that. The rand, as we said, a roller coaster ride. We did drop towards 1860 last week, back up towards the 19 rand mark at the end of last week, and early this week we're hovering around this 1890 mark. So really interesting there, but I do think that it's going to continue to be like this. Not a lot of movement, a lot of range-bound trade moving forward. And this could continue, for the foreseeable future, at least up until June. Could really see this range-bound trade, particularly with emerging market currencies, largely driven by the dollar, obviously. So, no real clear path at this stage, definitely.
On the commodities front then, Zain, much focus has been placed on developments around oil as well as gold. What's the latest there?
Gold obviously still holding that high ground, Tumisang, back up to a touch of 2200 today as well. Like I said, I think a lot of the gold, still with this uncertainty in the market, we are seeing still a lot of market participants holding on to those gold positions there, not a lot of profit taking at the moment. Also with the uncertainty, you always see gold as obviously that safe haven investment. Now on the oil side, obviously we do have concerns around geopolitics as well. After the obviously terror incident in Russia, we have seen or we have heard rumors that, there might be some cuts there from Russian production as well. And then obviously we do have that OPEC meeting early next week. So we're not expecting any changes there from OPEC in terms of production cuts or anything like that. But for now, I think the geopolitical concerns there largely keeping oil prices supported for now. So at the moment, that's all that we have, I think, from the commodities front.
Lastly, what's the domestic market expecting from the South African Reserve Bank on the eve of the MPC outcomes?
The MPC tomorrow, as a consumer, Tumisang, I'm not really looking forward to it. I don't think it's going to deliver what most consumers are wishing for there. I don't think a rate cut is on the cards anytime soon. I know earlier, I think it was in February, there was a poll done as well, leading economists seeing, Q3 as a potential for cuts. And I do concur with that. I think if we are going to see any rate cuts, it might come only in August around that time. I think we might only see a move from the South African Reserve Bank once we get more clarity from the U.S. Federal Reserve. For right now, I think the governor has been steadfast in his approach, saying that he would like to see, a consistent decline in that inflation. And obviously with the last 2 months, the uptick there, inflation hovering very close to that upper band of 6%. So for now, I don't really think a rate cut is going to come anytime soon. So not really good news for us as consumers, unfortunately.
We'll keep a close eye on the eve of those outcomes from the Monetary Policy Committee meeting that are expected tomorrow at 3 p.m. is the date that we have with the Reserve Bank Governor. It will include an announcement on the latest decision on interest rates in this country. That was Zain Vawda, analyst, talking to us about the latest market developments as well as some company news.